Okay, so are you thinking about refinancing? Probably. So I was drinking my morning coffee today and I saw this article by MarketWatch about how everybody should be refinancing or think about refinancing or what you need to consider. And I was like, okay, we should talk about this. So this year has really kicked off. And the reason it's kicked off is because rates are incredibly low. The coronavirus crisis has impacted the markets to a level where we're seeing rates that we haven't seen in 4 years. So it's an amazing time to refinance, and it's an amazing time to look at saving money. So I want to talk to you about 3 things right now that I think are really important if you're thinking of taking advantage of refinancing or if you're scared to even talk to a lender. So the first thing is, don't be scared to talk to a lender. I would call one over doing online just because you can get a better gauge over the phone about what realistically you could qualify for in terms of a rate. You know, if you have no idea what your credit score is, yes, credit needs to be run. But if you have a pretty good ballpark, we can tell you like, okay, this is the range I'm in. Let's talk about where you are right now and see if that makes sense. If that makes sense, cool. Let's go to the next step. Let's run the credit. Let's get all the numbers. But first, let's make sure that this even makes sense. If you're at 3.5 right now on a 30-year fixed, probably doesn't make sense. Probably doesn't make sense. If you're at 4, yeah, should talk. Depends on your credit though. If your credit's terrible, if your credit's great, oh my goodness, call me now. Call me now. So the first thing is I would talk to a lender and get a basic quote. And I wouldn't send them an email that says, send me your rates. I've gotten a couple of those because it's not the way it works. With rates, it's very specific to the borrower. It's what type of property is it? What is your credit score? The way that pricing works is it's in 20-point buckets. So I'm pricing someone at 710 is very different than if I'm pricing them at 699. Huge difference, unless it's a government loan. Okay. And then also, you know, how much equity do they have in the house? If you have a ton of equity, yeah, your rate's usually going to be better. If you have a ton of equity and you're doing a cash out refinance, yeah, that rate's going to be better. And then also, is it cash out? Is it not cash out? So we need all those details. And I always find it's a lot easier to do it over the phone. And you actually get a better gauge of what to do, because after talking to you, I may go, you know what? Let's look at a 20-year, or you're doing such an awesome job and you're saving so much. Should we look at a 15-year? And then you can have that dialogue. There's no commitment. Zero. No commitment. So that's the first thing. Don't be afraid to call a lender. If you don't have a lender that you like or trust, call me. I'm licensed in like 20 states now. So odds are I'm licensed in your state or I'm working on it. So give me a call. And if I can't do it, I'll refer you to one of my friends that is honest and ethical and will take good care of you. So that's the first thing. Second thing, oh my goodness, no cost loan. Okay. There is not one definition for a no-cost loan. To some lenders, that means that you don't want to pay their fee. To other lenders, that means you don't want to pay their fee or title and escrow or the attorney if needed. To some people, usually to borrowers, that means that they're not bringing in a nickel and their loan's not going up a nickel, okay? But if you have an impound account, property taxes and insurance can be quite a bit. I did a video recently on YouTube about impounds. Check it out. So you need to know, what does that no cost loan mean? What does it mean to you? What do you expect of the lender? Because there is no one definition for this. So make sure you have realistic expectations. Some lenders will think a no cost loans means that you don't want money out of your pocket. There really is no standard definition. Okay, that's the first thing. The second thing is, when you're comparing lenders, okay, compare them by their rate and their fees. Yeah. So there are some sleazy lenders right now. And if you're this lender, I'm looking at you, sleazer. And what they are doing is they are underestimating your property taxes. Yes. I had this with a client once where they're like, well, Bob's $3,000 less. And I'm like, well, Bob thinks your taxes are $300 a month and I know they're $900. Bob's a liar, right? And it was clear there was no way in a million years that their property taxes would be $300. It's super easy to Google and see when someone bought the house. And for instance, this was in California, which property taxes are over 1% at least. So it doesn't really make sense how a house that expensive could be $300 a month. But borrowers get tricked by this constantly. The biggest area that I see people confused on and being tricked by is impound accounts. How much is supposed to be in here? Here's what you need to know. The lender does not control your property taxes or insurance. Impound accounts are federally regulated. I can't magically make your taxes go down. If I could, I would do it for myself. But if a lender quotes lower taxes, you can't be like, but you quoted lower taxes. They'll just go, I didn't have the tax bill at the time. It was initial disclosures. Like, I had to get more information. And you're like, Jennifer was lower, I got conned. Now, in this case, we saved the client from the con, but you want to make sure that when you're comparing lenders, you are comparing them off of their fees and their rate, okay? So I hope this video has been helpful. If you want to talk about refinancing, please call me. Like, I do loans. I actually had someone call me yesterday and go, do you still do loans? And I was like, yes, I'm not just doing this for fun, although I do enjoy it. So I hope this has been helpful and have a great week.